It's the first time you're going to hear it. It's called peak inflation. We are so spooked by inflation that it's got us jumping at shadows. This morning, we got a consumer price index number that ran, red hot, up 0.4%, which gives you a 5.4% year-over-year increase, and that is the highest since 1991. In response, we got a cascade of selling. Sell. This morning, as of course the inflationists do what they do best, freaked out. But then the market rebounded from those levels. Dow ultimately dipping just 1 point, S&P advancing 0.30%, and the Nasdaq, which thrives on disinflation, jumping 0.73%. Because the sell-off made no sense. Maybe, though, I had an alternate theory we bounce off it. Maybe, just maybe, some people are thinking that inflation could soon peak, meaning that this might be one of the last red-hot CPI numbers. Maybe that's what the Nasdaq said when it rallied so hard. Now, I know that's contrary to the conventional wisdom that inflation's here to stay, and the Fed's too weak or clueless to stop it. You got to forget this whole transit inflation and get used to this new term. It's the first time you're going to hear it. It's called peak inflation. Turns out we don't need the Federal Reserve to destroy the economy in order to save it from inflation. With enough time, capitalism is going to solve the problems on its own. The bottom line, how about this? Be patient. Don't panic. We're getting there. The seeds of deflation are being planted as we speak, and the blossoms, and remember, I'm a gardener, and the blossoms will soon be self-evident to all but those who want to bet against you, the Fed, and capitalism. It's unbelievable. It happened again. I'm talking about how investors once again yesterday panicked and dumped stocks. Sell. Because they heard that inflation's running hot and the Federal Reserve has no choice but to raise interest rates. Sell. It doesn't matter how many times they tell you these moments are buying opportunities, does it? They're not selling opportunities, they're buying opportunities. The steady drumbeat of fear always seems to win out over what I have to say. And you need to search for broken stocks, not broken companies. The most recent broken stock, it's the stock of a company you know well. It's the stock of Disney. Now, if you sold this thing after all the chatter about the disappointing quarter, you would have dumped it down $12. Hey, maybe you'll dump it down $5 tomorrow. I don't know. But let me ask you something. Does this really make sense to sell this iconic company? Only if you truly believe that movies, theme park, and sports are obsolete, okay? Yeah, then sell away. Sure, there are short-term problems, largely because of COVID, not because of Mickey and Minnie or the Avengers, for that matter. But these will all be worked out over time. Layer on the metaverse. Don't you want to be an Avenger? How about one being the eighth dwarf? Don't you want to swim in a pile of money next to Scrooge McDuck? I always liked him. And you could have another revenue stream. Finally, Disney's open-minded. I think gambling's a natural extension of the ESPN franchise. They got to focus on that. Club members got not one but two bulletins about why Disney should be bought here. I am urging you to be a member of my club. We are working 24/7 for you. Now, let's go back to the self-proclaimed bond experts who periodically venture into my lane, the stock lane. Rather than be constructive about what stocks thrive in a higher inflation environment, they want to write off the entire asset class. Why? Because they don't know anything more than S, ampersand, P, and then 5 and 0 and 0. Here's what they know about the S&P. They know there are 500 companies in it. That's it. Okay, not 499 or 501. S&P 500's got 500. There you go. They got horse sense. Bottom line, these inflation fearmongers are ignorant of how the stock market actually works. They're ignorant about the way companies work. Their arguments are full of holes. So the next time they knock down the entire asset class and tell you to shut the set off and certainly sell your stocks, you should do some buying. Now, we had two kinds of inflation in 2021. We had commodity inflation, and then we had inflation involved in getting goods to market. Do you know, I think the prices in that vast commodity complex that I follow, almost all of them have peaked. However, we're still looking at rising costs associated with port delays, truck driver shortages, and, of course, COVID-related illnesses. The fact that we only have one kind of inflation, though, is tremendous news. And it will make Powell's job easier and should space out the rate hikes so that they're palatable, so that they don't hurt our portfolio if the portfolio is constructed right. Here's the bottom line. The charts, as interpreted by the legendary Larry Williams, suggest that inflation might cool down faster than most money managers anticipate, which would mean that 2022, which ends in the number 2, could be a much better year for the market than we're expecting. We are caught in a foot race right now between the forces of inflation and the forces of deflation. In a field littered with not-so-hot quarters, botched supply chains, broken quarantines, and above all, higher interest rates, That is the setting. Yep, the race continued today. Deflation caught up a bit, allowing the Dow to gain 273 points. S&P climbed 0.69%, and then Nasdaq advanced 0.75%. But inflation is still winning the darn race. But we do have to look for anything to suggest we could someday get these problems under control, don't we? Because that's the only thing that will stop the Federal Reserve from pummeling the economy with a rapid series of rate hikes that we all fear, which makes it so we feel that this rally is doomed. There are some significant green shoots on the deflationary side, though. Now, for instance, if you caught the Colgate call, I know you probably did. I like Colgate conference call on Friday. Within the catalog of ever-increasing raw cost woes, management dropped a real bombshell. CEO Noel Wallace, a hitter, got a question about margins and said, quote, "We have developed our plans based on spot rates today, and we expect those spot rates to hold and begin to moderate towards the back half of 2022. So you see the raw materials potentially peak in the first quarter and then stabilize, potentially moderate in the back half." Wow! Holy cow, this is the kind of statement that's totally antithetical to all the hand-wringing we've been hearing from the food and consumer packaged goods inflation companies. The Fed will definitely raise interest rates, maybe many times. Declines will accelerate, and inflation will definitely be tamed. Most importantly, the market will have anticipated all this and will bottom well ahead of everything that I just described. So when does it fully get baked in? Okay, I'm not sure. But the bottom line is that we price in this negativity far more quickly than you think. Maybe it takes a month. Maybe only a few weeks, but it will happen. And once it does, we will be poised for one incredible, tremendous rally. Believe it or not, if you want to get a read on where inflation's headed, you could do a lot worse than taking your cue from the used car market. In retrospect, used cars have been a powerful leading indicator of the broader wave of inflation that's taken the country by storm. That's why we were so really just glued to watching the numbers, listening to the conference call from CarMax so closely. And they tell a very different story from the overheated CPI and PPI figures. Maybe they're one of the reasons why people say peak inflation. Now, I'm sure what you say is, Jim, that was the most anecdotal rant on inflation I've ever heard. I look at it otherwise. I say, empirically, you take everything together that I just said, and it is just a matter of time before everybody else realizes what you just heard, which inflation peaks.
We finally get to put to bed today the worst first half of the year since 1970. Futures are red despite another cooler than expected inflation print and core PCE up 4.7. Bonds rally 10-year 302. The 2-year is back to 295, Jim. So we had German CPI this week, UMISH revised, and now this. Can we definitively say peak inflation's here?
I think yes. I know it sounds crazy to say we're winning the war against inflation when the CPI, Consumer Price Index, was up 9.1% last month. But you know what? I believe it. What makes me so certain, I think things are about to get better, and the conventional wisdom says it's going to get worse. But remember, I think the conventional wisdom is rear view mirror. Why do I say this? Simple. You have to get granular when you look at these numbers. You have to get your hands dirty. You have to listen to the stocks that tell you the future. I am a stock whisperer. Peak inflation, peak inflation, peak inflation, peak inflation, peak inflation.